So a disturbing article dropped last week from the Globe and Mail, and I bet most people didn't even notice the punchline in this article, which relates to a big bank in Canada, specifically RBC. So Toronto buyers left in lurch as pre-construction condos now worth less than original value. So this is happening because obviously prices have declined. So during the real estate frenzy in late 2020, Joe decided to buy a $2.195 million pre-construction condo in his tree-lined neighborhood of Leaside. He put down a deposit of $439,000, which is the equivalent of 20% of the purchase price, which is pretty standard for pre-construction condos. So let's see what else they're saying here. So when the building was nearing completion last fall, he got the property appraised in order to secure a mortgage. Documents viewed by the Globe and Mail show the appraisal came in at $1.6 million, 27% below his purchase price and sales agreement, which is a legally binding document. So obviously incredibly concerning, and this guy is not going to be an isolated case. With the prices declining as much as they have, you know there's going to be more and more people in this boat. Now, if you look at the condo apartment median, you can see it nearly hit $800,000 back in 2021 and early 2022, and it's declined. And you know, one thing that people don't really understand as well is during that time, inflation has been incredibly high. And even if you believe the CP lie, you know inflation has been very high, and you can compound that and know that the investment of putting your money into something like this has been a train wreck. I mean, it's more than 27% he's lost. And if you're looking at a more accurate number like ShadowStats, you know for sure inflation compounded over the past 3-4 years, even 5 years, has probably been close to 30-40% for most people. Obviously inflation is a personal thing. But now let's get on to the punchline of this article, because it really is bad. So basically Joe decided to leave his deposit because he wouldn't have been able to finance the condo. But listen to this. This is really, really interesting, and I'm not sure a lot of people really notice this. According to documents viewed by the Globe and Mail, the developer, Gairlock, sent him an email saying it had partnered with Royal Bank of Canada to offer a so-called blanket appraisal, which would allow buyers such as Joe to secure mortgages for their units by having the bank appraise the unit at the original contracted price. And that Joe guy declined that. I'm not sure for what reason. Maybe the interest rate was extremely high. I don't know. We don't have the full context on what exactly is going on there. But doesn't that sound incredibly shady? So the unit is worth way less, but the bank is going to do an appraisal of it and appraise it at the value of the contract, even though it's worth 27% less. I mean, it's not like you're talking about 4-5% here. You're talking about huge numbers. And as we know, a housing bubble is only allowed to form when you have the circumstances of easy lending practices and easy money, which definitely Canada had during 2021 and 2022 during the hysteria and mania. And people were taking insane risks, and there was an insane amount of fraud. And it even talks about it here about assignments. So lenders will only provide a mortgage based on the appraised value. Joe was on the hook to bridge the $595,000 gap. He could not sell the rights to his contract, also known as an assignment sale, until the developer sold 90% of all the building's units, a common practice in the industry. So they haven't even sold all the units. And again, you've just got to think about the risk here, because you've got all these developers that are completing. They haven't sold all the units to the building. A lot of people are on the hook for massive gaps, and all these buildings are in the huge bubbles. We're not talking about $100,000. We're talking about $600,000. And if you times that by 10,000, let's say, the number of units in the Toronto and Vancouver area that are potentially in the same situation, you're getting to a huge number very, very fast. And that's when it becomes extremely concerning, because the risk in the banking system is obvious. And then it makes me so suspicious when you hear stuff like this, that they're going to provide an appraisal based on a contract price, even though it's not worth that. I mean, it boggles my mind. And unfortunately, we don't have the full context of what's going on here, but incredibly interesting. And then guess what? Canadian banks saw mortgages in arrears jump 22% higher. So this just continues to happen, guys. And we've said that this is going to continue, and it just keeps going. And the economic circumstances and challenges, they're not turning around anytime soon. In fact, they're getting worse, unfortunately. So Canadian mortgage borrowers are increasingly falling behind on their mortgage payments. The number of mortgages in arrears climbed 22% to 10,480 in November, the most held by CBA members since March 2021. And think about that, guys. March 2021, how was things in March 2021? Obviously, the mortgage deferrals were going on at that time. So, that is one factor to bear in mind. And we're only talking about CBA members, which is your big banks and chartered financial institutions. So that excludes all the small lenders, which boomed in this mania and hysteria. So, private lenders aren't even included in that. We don't really know the full story. But when you look at the things that Shazzy is publishing on X, you can blatantly see that there is a problem, because there's a lot of power of sales now that are going on. And when you look into the details of them, most of them are private lenders. Surprise, surprise. So it just trickles down, because the risk is not just concentrated in private lenders. Obviously, it's also in the banking system as well. So if you look at the chart here, you can see that this is increasing, and it's the volume of increasing mortgages that are in arrears that is the most concerning here. And obviously, you can say it's lower than it was, for instance, in 2019 at 0.24%. But here you have to remember there's much more risk, because the amounts for the mortgages are higher for one. You've had a lot of people that have been in negative amortization for years, so they're upside down on their mortgage, and all you're really unfortunately waiting for is a massive increase in the unemployment rate, which has been happening, and that is just going to trigger a lot of people to start losing their homes. But we do know that what will likely happen is the government will come in with some free money program, and that will have huge economic consequences and trade-offs that will go with it. So you have to continue following the channel. They've made it clear that stimulus is just going to continue to rise. And then we covered this last week. Insolvencies rose 12.1%, led by business filing. So all of this, rising defaults, you've got insolvencies in businesses that keep going up and up and up. More and more people are being laid off as a result of this. You know that things are not going well in Canada. And if you look at some of the price declines here that John Flynn posted on X, I mean, if you start off at the top here in Halton region, which is right by Brampton, you're at 381,000. This is from the peak. Then if you look at York, 361,000. I mean, it's just completely insane. You go down to even Calgary is down ever so slightly from the peak, but the peak has only just happened, and we don't know if it's the real peak right now. But that city is not immune to economic turbulence either. Neither is Edmonton or Montreal. So all of these places are eventually going to get hit, and you've only got to look at the trend of where things are going. And the fact is that when you look at the trend of what's happening with people falling behind on mortgages, what's happening with people falling behind on credit card debt, how much credit card debt has increased, the amount of people who are upside down on their mortgages, it's absolutely insane. And then another key thing here is this: a rare occurrence is also happening. Canadian banks have fewer mortgages. The CBA reported a total of 5.01 million mortgages held by its reporting members in November, shedding about 36 6,500 since last year. Annual growth has been negative since April 2023, which is an extremely rare occurrence in Canada. Prior to that, going all the way back to the mid-1990s shows only 7 months in 2018 and 2019 where annual growth declined. These lenders are now holding the fewest mortgages since 2021, which is really interesting actually, because that shows that essentially the deleveraging is already starting to take effect, happening slowly, but it's definitely happening. And it's not because the banks are just diversifying more and more away from mortgages. No, it's just because the demand isn't there, because the big real estate bubbles and powerhouses, the volume just isn't there anymore, and the markets are essentially just frozen. I mean, we've seen that Toronto, for example, the sales are at the lowest level going all the way back to the 1990s, and now they're saying that the contraction in mortgage growth is exactly the same. You're looking at the 1990s again. And we also had a yield curve inversion back in 2022, and the yield curve uninverted last year, but that inversion was the strongest inversion since the 1990s recession. So you put all these dots together and you have a drawing or a picture of what's potentially going to unfold over this year, and it's definitely going to be economic turbulence, especially when you add in all the unknowns about tariffs and different things like that. So anyway, if you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN and also want to help support the channel, please go to expressvpn.com/marketmania. Appreciate that, and I will see you in the next one. Take care, guys.